Let's continue. So as we did before, what we did is we walked through how to calculate the account balance. And that's so simple to do, but very vital and important to do when you're getting ready to prepare a unadjusted trial balance. You have to calculate the account balance. Look back at the prior video and you'll see how that's done. So now that we've arrived at the account balance, let's take a look. Again, these are all ledger accounts. Every one of these accounts that we've created has its own ledger account, each own page that's in the general ledger. As you can see, there are postings in this ledger account which came from the journal. The original book of entry, the general journal made these postings. Let's look at accounts receivable. On 12/15, there was a debit posting to accounts receivable of $40,000, and then on 12/20, there was a credit posting to accounts receivable of $20,000, leaving us with an account balance of accounts receivable at the end of December of $20,000. That kind of summarized how we were and what we did when we started out with the general journal, posting it to the ledger account, and then arriving at the account balance. We now have this account balance which we'll use in each one of these respective natures. Let's look at cash. You got two debits, one of 50, one of 20 on two different dates, and then you have a credit of 24 on 12/31, giving us a net debit account balance of 46. Simply do the math. It's very simple. Now that we arrive at the account balance, let's look at retained earnings, no transactions. Let's look at common stock, 50,000. Let's look at service revenues, 40,000. Let's look at dividends payable, 4,000. You now see the account balances of these accounts, respectively. Same thing for salary expense, same thing for dividends. We now have all of the account balances. Some one transaction, others multiple transactions. But whether we take the difference between debits and credits, we arrive at an account balance, which is the ending balance in the account, whether it be a net debit or a net credit. We are now ready to move forward with preparing the unadjusted trial balance. Key word, unadjusted. What does that mean? There are no adjustments to these accounts other than posting the activity from the journal to the ledger. As we move further into this chapter, we're going to talk about adjusting entries, and then we're going to prepare what's called an adjusted trial balance. So you'll go from unadjusted trial balance to adjusting entries, and then to the adjusted trial balance. We'll talk about that in future videos. But right now, we're dealing with the unadjusted trial balance in its unadjusted raw form, and its account balance. We now are ready to take these numbers, these account balances, and put them in an unadjusted trial balance. And let's look at how it would look. Here you have the preparation of an unadjusted trial balance for this company based on those account balances that we've arrived at earlier. Key thing, cash does not have two different balances. Even though when we looked at cash previously, there were debits and there were credits. Let's look at it real quick. Cash, we had two debits totaling $70,000, one credit totaling $24,000. In the unadjusted trial balance, you just got the account balance. You don't show the total debits and the total credits. You show one number representing the ending balance in the ledger account for cash. Respectively, you use the account balances for all of the other accounts, the net account balance, and then you arrive at either its net debit or net credit balances. As we saw in retained earnings, there was no activity, so that was zero. Donut, for those of you that know their donuts. And we show the ending balances respectively. Here's a very important point. Because your journal entries, your general journal, remember I said you can have 20 debits, one credit, 20 credits, one debit, one credit. Doesn't matter how many debits or credits you have in a transaction. What does matter is that the dollar amounts equal Once you've done that correctly, the reason why we do a trial balance is to make sure that our total debits in dollars equals our total credits in dollars, and they do. $94,000 in total debits equals $94,000 in total credits. Therefore, we know that our posting and our journalizing was correct, and we have done the right thing, because at the end of the day, our total dollar in debits equals our total dollar in credits. Once you've done that, you can then move forward to the next step, which is adjusting entries, which we'll talk about. But before we do that, we're going to move on to our simulated problem that we did earlier in class, and we're going to look at an unadjusted trial balance in the same fashion.